Let's now bring in Mark Avallone, president of Potomac Wealth Advisors. Mark, this is probably the worst kept secret or the most expected rate increase we're probably ever going to get. Is there anything that changes the Fed's outlook given the CPI numbers later on today?
Well, it's highly unlikely that they change course. It's very important that they maintain an aggressive stance against inflation, because Powell's last speech said that in no unclear terms that inflation was public enemy number one. Any hesitancy on that, especially after all the Fed governors have come out and spoken in that regard, would come across as weak against inflation. And actually, deep down, I think investors want inflation under control. As much as higher interest rates hurt stock prices, I think investors realize we have to tame this inflation beast.
Do you think investors already realize, or are they convinced at least, Mark, that inflation is in the, I won't call it peaking because that would be a bold call, is in the process of peaking? We're seeing multiple signs in credit and treasury markets. We're seeing signs in commodity markets about this idea that expectations for inflation are coming down. In your mind, are investors now prepared for what could be this inflation print going forward?
Well, that's a great question. And I do like the way some of the commodity prices are cooling, and even energy futures and oil futures are cooling. But what's also happening simultaneously is wage demands are going up, and the cost push, the old 1970s style root cause of inflation, spiraling wages, is alive and well. The calls for unionization, we hear it on the rails, and that's a big story that could evolve. I think the way wages are on the rise is an offset to the benefits of commodity easing. So no, I don't think that inflation is in the rearview mirror. I think we're in the middle of this battle, and we're going to see how it turns out in the next few months.
Do you find that there are places right now, we're starting to see maybe a multi-day winning streak, albeit off low levels. We've had a bit of a sell-off in recent weeks here. Are there still places that are attractive in the market to you right now?
Well, I think we get bounces as soon as we think that inflation is pulling back or the Fed's going to say nice things. And I think that's hope and optimism. We're still in a bear market. I think, though, for folks who still have to deploy capital, you have to figure out what side of this equation are you on. If you're a growth investor and you believe that in a slow growth world, growth is going to give you top-line revenue increases and be attractive to investors, then you want to invest in technology. And that's something that we believe in. We're not abandoning the technology trade. If you want to balance out your portfolio and you're looking for other areas, you want dividend payers, you want steady, reliable companies. And we think insurers are well poised in that area. Their balance sheets hold a lot of cash. Their bond portfolios have already been beaten down. Now they benefit from higher rates. They've done a lot of internal cleanup. They've reduced their risk profile. So I think investors can look for sectors and areas of the market that might do well in an uncertain market.